Greetings, market rebels. Welcome to this week's macro measure. It is Sunday, August 13th, 2023, just a few minutes in front of noon here in the East Coast. And I'm going to do the usual, just flash our trusty disclaimer, and then I will flash our trusty intellectual property rights notice. And then we will cover the stream very briefly from last week, and then we'll cover the stream very briefly from this week. And the reason for that, I'm just going to leave them up as I talk. The reason for that is because I've been having significant computer problems again this morning. There's some sort of a conflict that I can't resolve between my AMD graphics card software and the Windows 11 update that my PC did recently. So it's just been very unstable, and I've had one heck of a morning. I wish that it was due to laziness that I didn't have this all in line, but I'm almost afraid to not just record this while I can, because things continue to glitch out on me. So this is a quick look at last week's, not going to hit on anything. The only difference really this week that I'm just getting in there just for the fact that we should have one little difference, because there are other differences, but we're just going to have to cover the tabs without going into too much detail. Otherwise, again, I'm at risk of maybe not being able to get these recorded today. It's almost impossible to do on my laptop, honestly. So I'm sticking with my desktop while it still functions. But anyway, I would just say, look, what we saw with the back and forth on some days, right? I would expect more of that. I would expect that they're going to throw a few more wrinkles at us. I think this is a difficult juncture to pound the table because we've already backed off somewhat, and you're right near the 50 on the Qs and the SPYs. And I wouldn't be surprised if there's really more of a bounce first, and then maybe we see what happens from there. Maybe potentially we start going back into sell-off mode. We'll have to wait and see. Just not as easy as last week. And I can envision this as a bear trap. And I've got to weigh that against what I would call the modern times swift sell-off. So during 2022, so I think what I'll do is a skip over to a chart, and then we'll get into the tabs, and then we'll finish with charts like we always do. So just bear with me. I'm going to stop the share briefly, and then I'm going to reposition things so that we can get cooking on things. And I'll start by sharing a different screen. Hopefully this will work. I think screen 3 should work. Let's see. Hopefully, yeah, it looks like it is working. So this is just the TNX, and I've been talking about this for a while now. And, I think everyone should really be keeping an eye on this, especially, and then the dollar. And, they're somewhat related, right? For sure. You'd have to say that. But the other side of it is that, just in both cases, usually, right, if this is rising and the dollar is rising along with it, just not a good situation overall, typically for stocks in modern times. So we have to be cognizant of that. And I think this is potentially right on the verge of trying to test this high back here. Now realize, right, we're looking at a yield. We're not really looking at the security. So we're really looking at, right, kind of a derivative or a calculation more so. And anyway, the point is, right, that you can sort of chart this that way though. And this is potentially getting there or higher. And so that would be the highest rates that we've seen on the 10-year yield in some time. If I go back 5 years, it'll give you an idea of where that was in 2022, right, in the fall before. Remember, right, this is right near when the market bottomed and the yield started sliding, and you all know what happened from there. And so if we look back over the past 5 years, that was the highest rate that's been recorded over the past 5 years, right? And so to me, like, this is a problem. If we look at this in a bigger picture view, let's just pull up like let's try to do we'll do a 10-year weekly. And I think you could see that this pattern, right? If we were in a bull market in stocks, and or at least a strong bullish phase as we had been in, and I came across a chart that looked like this, I would be excited about it as a bull. And so to me, this has been consolidating now for some time, and it just continued to strengthen and work its way back up towards here. And I think it's perched to try to make a run at that. And if it does succeed, right, I've got it probably succeeding would be my take on it. Let me just see if I can. Well, this is why Thinkorswim can really get under my skin at times. I just don't like the way that it just doesn't handle some of the things I've got on here. It doesn't handle things all that well sometimes, but it is what it is. But yeah, I think if it can take out these highs, I think it's going to work its way up towards about 4.28 or 4.428, whatever you want to go with there. But that's the idea, and that would clearly be a little bit higher than here. I don't know if that's the end of the world, but I do think it's a situation where you have to look at this and say, right, that's pretty high. We have so much debt in this country every which way to Sunday. And how does this not really, in some way, right, serve as a drag on so many things and make financing more difficult for this, that, and the other thing. So that's been my premise. It's probably the most basic premise you could have, is that, right, when you have an economy that's so dependent upon debt the way this one has become, probably through intentional machinations or machinations, however you care to pronounce it. But that's a whole nother aside. But regardless, that's where I think things are. And to me, just this is becoming I think suffocating to an extent. I don't think it's showed up completely yet, but it could if these rates continue to push higher. And I just don't see how stocks, just in the face of that, could rally back to the all-time highs and beyond if rates continue to rise, or at least stay elevated. And once we look at the tabs, I think we'll see that is certainly possible with some of the information that's out there right now. Now, that's the problem, right? We can't cover everything. This is not a news program, right? This is not a news video, but part of what we do every week, especially when we think it's an important turning point, like we have recently, is we sort of expand the coverage to beyond the charts more and look at a lot of these different tabs that Ryan and I accumulate throughout the week. And I didn't mention that Ryan, a lot of you know, Ryan's traveling with his family to Italy this week. He's already there. Hope he's having a good time already. And so he'll be out for the week, but hopefully we'll have everything covered to the best of our abilities for all the different webinars. Everybody will be stepping up, and the market outlook's being handled by the MR team, so that ought to come out at some point today as well. But I failed to mention that earlier. But yeah, this to me is becoming the big key. And I don't know, of course, right, I don't know, of course, that there's a guarantee that this thing takes out the high. I just think the potential's there. I mean, I think if you look at the technicals right now, it's just continued to pick up strength, and more things are joining the technical party to make this look better. And I don't want to go into all that, but that's how I'm reading it. And so I'm not really in the mood to pick a fight with this. We did have a little discussion in the Rebel Pit Elite with a few folks that were interested in this, and I did note that I did see resistance where we were, and I've been charting it really on a daily, and you can see that on a daily chart, you can see like something that is a lot more. That's too short. Let me get us more. You can see the resistance there really from my line. That's really, I wanted to go a little bit bigger on this, but this is the crux of it to me. Maybe I'm too obsessed with interest rates and so on and so forth for my own good, but I guess some things you just can't get away from. But yeah, I mean, having bottomed recently at the 20, right, and then strongly reversing after this really nice run off the 50 there in gold, light blue 20. That to me, right, it's holding up. It's put in that higher low that you like to see as a bull relative to the recent high. And that high itself was actually higher than several other highs. So this should have enough energy to try to put a serious run together. And that's what's the problem in my mind. That's the big problem right now. And we talked about it on Cocktail Hour on Friday. Pete made mentions of this as well. And so I do think that is it right there. That's the crux of it. So that's why I'm beginning on that. Now I'm just going to find all my tabs, of which there are many, And then let me try to get that in place for all the tab coverage. I hope this is the right one. And that is the right one, actually, but it ended up on a different browser. So what I'm going to do is quickly cover last week and the kind of like the consistent tabs that we do. And then I'll rip through just some of the ones we went through last week because they're still sort of pertinent if you didn't catch that or if you're new to our weekend videos. But target rate probabilities, right? This is one of my arguments that this is going to stay elevated based upon how the market's pricing things, right? It looks like through the end of January. And like I said, staying where we are is significantly higher than what the market, what bulls were spinning late winter, early spring, roughly speaking. So that means, right, rates went higher and stayed higher for a lot longer than the story that they were selling had it. And to me, that's a problem, right? And it's probably legitimately the case, right, given what's going on, but it is a problem. Okay, there we go. Yeah, I'm not sure what took so long on that one. But anyway, we must have refreshed. But we do a quick check here, right, on the percentage of stocks above the 20, 50, 200. You can see this corrected. They started to come after these Friday. I don't want to read too much into one day. There have been some bottoms, right, across time recently that have occurred near here. So it is kind of in a strange way, right, sort of a support level you can see. We don't always correct below there. There's a lot of times you will reverse from just about where we've got to, but it did pull off a lot. They've got a little bit of a reversal happening. Like I said, maybe they try to put a little something more together, and I'll show you the bear trap argument as well, which kind of relates to this there, right? I still think there's room to go on all these to the downside. There's your 50, and then here finally you've got your 200 right here, right? So that has a long way to go. But the bear trap would really look like this on the Qs are the best example, I think, right? Because people, remember, you have to go back to my notes on the stream screens, right? The PowerPoints, if you took your snapshot and just set that aside. But my argument has been, right, that a lot of people, this has been a very hated rally, right, by a lot of people. And I think a lot of people that are not as big into the charts as we tend to be at Market Rebellion, they've really had a problem with this rally. And unfortunately, right, I unfortunately, on the one hand, like I agree with their, I guess, macro and economic take on it, but I really feel like you started to see signs that we pointed out at the time here that should have told you that you got to be a little careful, right, in terms of fighting against us and expecting a whole nother leg. I will say, right, I never thought that we'd rally 53% off the low in about 9 months, but we did. You know, and that's what happens in the markets. But the point is, right, that this does not look good. If you can see that you're breaking down below a support line that I've got there and had there, but you're also breaking below the 50. And that's really the ringing of the bell for a lot of people in many ways. And so it could have already brought a lot of people in that anticipated that. And that might help the gang waft things back up a little bit above there to see if they can get it back above that support line, back above the 50 and hold it. So you might have to deal with that for a little while. On the flip side, the problem that I have is that I've said this a lot during 2022. I don't want to go into too much detail on this, but I was consistently, how can I put it? I was consistently too patient and too conservative, during 2022 in terms of, and even other recent years where I would say, well, I don't think the thing just starts falling apart very quickly. We normally would do this or that from my prior experience, right, in all the decades prior to this. But you can see that we do fall apart quickly. You can see some of these are really quick drops. I know that's really an ugly chart on your end. So, but I don't want to get too deep into this. But the point is that these things can really be, you could have these really vicious rallies when you're in a bear phase, but things can fall apart very quickly. And that's what happened. It even happened during the pre-COVID when Ryan and I were just wondering what was going on, that the market wasn't even factoring some of this COVID stuff that we were seeing in, and things fell apart very quickly. And so that's been my sort of reluctance to say I feel like that they're going to try to put a little something together here, and they're going to try to lift this back up. Probably, like I would expect that probably from most of my experience, I would expect that more so. But the modern times, right? Things just have really unraveled quickly. And so I'm kind of balancing that against that to say, well, wait a minute, have you not really paid attention to the last few years, last 4 or 5 years? Things fall apart, right, very quickly in a big way in this market at times. So that's my problem. I don't know which way to go. I'm kind of like, I can argue both sides and feel comfortable that they're valid. And whenever I get to that point, that's where I'm ready just to say, I don't know. I don't know. I don't have a great confidence, right? Because I just don't. So I don't have great confidence to say what happens next week, starting early, and how it finishes. I do think overall there's going to be more corrective activity coming, right? That's my take on it. And so I'm more prepared for that. I don't think it's over yet. Again, you never know, could be dead wrong, but I do think there's more coming. And it's just a question of the path and the timing as always. And so I think your best bet is to again stay with singles and doubles, because this could be a bear trap that sucked in a lot of people already. They could put a little something together. It really frustrate people, kind of like the day they turned on that waft algo on Thursday. I think it was that was the gap up. It was one of those days that they turned it on and just moved stocks right back up. And I was just like, it was ridiculous. It was that they turned that algo on. It's almost like everything else shuts down and this thing just takes over and dominates. But there's a lot more room to fall. I think the retracement's going to be of this move higher a lot larger than what we've seen so far. I don't know exactly where you get to, obviously, but I do think now that we broached the 50 in gold, the chance to get down to this 100 is something that definitely could play out. And so, but I just think that there's a good chance they're going to try to pop things back up a little bit before they let them fall right away. But again, that to me has become a tough call. So that's really why I'm where I'm at right now in terms of everything. So let's get back to these tabs. And we looked at where we are now. Another quick look is fear and greed, and we haven't corrected all the way, or you're nowhere near right extreme fear. So there's still a long way to go there. Now, we did say that we thought this was bearish last week when the AAII had really popped strongly to the second highest reading that was seen in some time. And that did kind of come back into line a lot more. Still overly bullish, for the next 6 months, though, still overly bullish. So there's still potential room for corrective activity there. This is also from last week. I'm not sure why there it goes. Right. This is just establishing, right, there's still a lot of bulls out there. Difference between bulls and bears recently, very much tilted towards bulls. Reminder of where we are, right? We're kind of in this post top on the third year phase. And usually you've got some rough stuff that happens for the next few months. That's what we've been banking on, because this third year presidential cycle analog has worked so well. But just remember, next year, we tend to rally into the finish of this year and into the start of next year. So if this plays out, once these guys get a hold of it and it's time to start ramping things up to max out their bonuses, all right, unless there's some really some macro drivers that make that impossible, they probably will. Right, we are just past the sweet spot, and just note that this is what goes on, right? So expect this to be, right, like I'm saying, volatile, back and forth. This is what I'm sticking with for now, because it's so far it's playing out, and that's just my technical sense, right, that of where things are as well. Remember, we've been talking about the volatility, and it might not be a bad idea to position yourself smartly. I've been mentioning that for a while, and that you may finally see the VIX may end up with a little bit of corrective activity after the gap, but after that, it probably does start to pick up if we see higher rates, stocks sell off, dollar rallies, the whole works, and then you probably finally get more of a VIX move. This is just establishing, right, that things are not all that wonderful. Depends on where you look. If you want to find the balance to the perma bull, stuff, you can always go to Zero Hedge, clearly, right? That's the site to go to for the other side, if you will. And then there's just a lot of things out here that you should check into. But I'm just going to flip through a couple more, and then that's, yeah, it looks like we're getting trouble. I'm getting trouble on loading, and I'm not sure. This is another thing, right? The Stock Traders Almanac. This is the son of Yale Hirsch, I believe, Jeffrey. And anyway, the point is that you tend to have corrective action right after a big July. We talked about that last week. So again, I don't want to belabor that because this is all last week's stuff. But I'm going to probably skip through the rest of this and jump to next week, or I should say this week's stuff. Credit card interest rates, right? Just see where things are here. This is right, almost a 50% move higher in the last year plus. So people are really, really getting the screws put to them by our friends in the usury business. Let's see, where's the, no, here we are. Okay, so this is what I wanted to get to. So some of these are from last week, but I think these are some of the most relevant things. So just sticking with that, what's going on in the economy, right? Where are things that we were just checking out on a few tabs, right? This is where the Atlanta Fed is up here. This is where, right, this is where your firms are in terms of Q3 GDP, where it's tracking. So right, this is the range of top 10 and top bottom average forecasts is right here. So there's your blue chip consensus in terms of where the firms think things are as per surveys. I mean, where blue chip thinks things are as per surveys of the firms. So massive difference, right? Completely different. The consumers, right? They're finally cracking. Okay, I'm not going to belabor this. We're just going to whip through these. Demand for bank loans just fell, right? So I guess in a sense, right, folks are and here and in Europe, right, where folks are not willing to really extend, right, at the moment, thinking they must be seeing something or sensing something that's not all that wonderful. Speaking of which, we showed this last week on how, and again, this is apolitical, how every administration really does this, but this is, we're starting to stack up where, right, the government reports the non-farm payrolls, and then because no one really cares about revisions, they get away with inflating the results. And that there's even been more on that this week, where you got to go check this out if you're into that stuff. But right, if you look at some of the sleight of hand that's going on there, which again is typical, but this is, this is starting to get egregious. Okay, so just bear in mind that all is not as it seems, and that's why I was kind of like, I think I mentioned on one of the webinars or cocktail hours, I might have even talked about it in the videos last week, like seeing Rick Reeder, seeing all these people like Rick Reeder and the rest of them just come on Bloomberg and act as if these reports that they want, the reports that support their book, right? They always, no one's saying, oh, this is dubious. None of these high profile people are saying that. And that's just a problem to me. That's just a lack of integrity. Like, I get that you want to talk your book. Everybody does. I do too. But, part of this whole business that we're all in here is to deal with reality. And ultimately, and so I don't think there's anything wrong with being skeptical about certain things. I think you retain your own personal integrity that way. But again, I don't know. Maybe that's not a as they say in the Wall Street, the movie, maybe some of these people had an ethical bypass at birth. Don't know. Anyway, this has gone haywire. One of my favorite words to use for what happens in the modern markets, right? So here's your cost to buy versus renting. You can see the stretch now is just pure madness, right? It's just absolutely pure madness what's going on here. So they've got homes priced exceptionally high, which shouldn't surprise you that the housing affordability index, should it push all the way through, for some reason, I don't know if this is AMD, what's going on, but I'm not getting the graphics to work here on some of these tabs, and that's just weird. Okay, guess we're not getting that one. But anyway, housing affordability is now below levels. So it's worse, right, than the housing mania that peaked in 2006. And when you combine mortgage costs, right, mortgage rates and gas prices, this is where you are, right? This is extraordinary pressure on the consumer. Oh gosh, why are we having all these things relaunch? And as a result, this is what's going on in California, largest state in the union in terms of population. And you can see that, yeah, 16% of Californians can afford to buy a home. Just gives you an idea where you are. Some people are arguing, right? As much as I said last week, a lot of these bulls were doing their victory dances about everything. And when you see that, and I saw it all over Twitter, that to me is another great contrarian signal. And I've seen a lot of them just sort of pipe down a little bit now already. But when they sort of celebrated victory, celebrated the soft landing, it was absolutely the wrong time to do that. And the whole chatter really shifted overall in my mind on Bloomberg over the past week. Inflation coming back with a vengeance, as per some. Here's our trusty Sven, right? He's saying that what's going on is that what's made this possible, despite everything, is that there hasn't really been financial tightening to this point. So we haven't really gotten restrictive. I wish I could show that. You're going to have to track this. If these things don't populate them, I guess just track them down yourself. I don't know why some are and some aren't. It's just really strange. But you could start to see, right, what's going on here in terms of the inflation break-even rate. This is really not what you want to see. And you could, come on, everything's a reload for some reason. Wages are now, I guess, moving up. Right. I don't know if that's how, like, I couldn't really give you a super number on that. They've got it expressed here in percentages, but it's better, right? That's better, but I don't think that's going to overcome what we've seen in inflation from last week. Just to show you, right, that Fitch is downgrading Fannie Freddie. The U.S. itself got downgraded, right? The country. Corporation, whatever you want to call it. Moody's was cutting the ratings of 10 banks. You've got Germany's in a situation where insolvencies are spiking big. Energy crisis and inflation are hurting German companies. Why that's important is because that's your biggest European economy. You've got China here. Right, this is from last week, but this is rollover territory. Things are really seemingly not looking good there. There's no risk premium at all. We've talked about this, right? So you can either get supposedly risk-free returns from the 10-year Treasury, or you can, right, go into stocks and get the same expected return, but with all the risk the stock market entails. So that's what they're getting at here. Kind of a big deal in my mind, but again, I'm old school that way. We had this last week, right? So one of your major shippers, remember, I think this is 1/6 of the global. Yep, 1/6 of the global shipping. They're talking about prolonging deeper downturn trend. Now that's from last week, but that matches up with, right, all this is happening. And remember where we recently have been in terms of positioning, how everyone really got long. That's what we were waiting for in terms of our sleeper scenario. And then now we're actually flipping into systematic selling. And I also saw that gamma is going to start coming into play below certain levels, which is why I think we stopped near the 445 level. I think that's a big sort of gamma flip on SPY. I don't have that current data. Ryan and I have developed a lot of things over the years. This is something that we have worked on in terms of how the options markets can affect the pricing of stocks and create volatility, things like that. But fortunately, a lot of other players are doing this stuff now. It's becoming kind of like a little mini gold rush, I guess, for some companies that like to put out analytics. Hopefully, we'll be able to do that ourselves, not too far into the distant future. But anyway, I think it's something that's worth keeping an eye on. But yeah, I do. I think there's a big flip right around there in SPY, right near really where we close. So if you start drifting back below this 50 and so on and so forth in SPY, that could start to ignite a pickup in selling. Remember, there's going to be the CTAs flipping. Remember, like this, it's all there, right? In other words, this might just be the first leg. It might be the whole thing. We don't know. But to me, the risks are just ratcheting up and right on time for that cycle. So if we stick with the third year presidential election cycle, we should expect things to be rough probably for another few months. Like I would say probably through October, maybe even somewhat into November. And then suddenly, right, all will be well and the gang will ignite a rally if we keep tracking that. That's a big if, though, right? It's done very well. There's done very well this year to keep an eye on it, I think, overall. But you just have to keep it in the back of your mind, in my mind, and not really think that it's the script for this year, right? Because we are in a dynamic situation, you would like to think. And I don't know if this stuff plays out perfectly, right, for the rest of the year, just because it hasn't. There's nothing saying that it has to or it should, right? It's just the typical behavior that we see, which is powerful, I think, and worth keeping an eye on. But we've already fallen a decent amount here, right? So let's keep that in mind, that we've corrected somewhat. We were probably getting, I think, oversold on some of your intraday levels here. I could probably switch over to hourly there and see maybe where we were RSI wise at the low on Friday before the gang did their thing. And it looks to me like on that, they got down to below 40. So you're not really on that. You're not really too far down. You're not really done where you're over, even on an hourly. So they brought it towards oversold, but they didn't really get it to completely oversold. And so that would almost be a good sign for bulls in my mind, that it wasn't even able to fall that far. So now that these short-term SMAs are starting to potentially change their slope, the 20s also looks like slightly, it seems to be sloping a little bit down at the moment. You might have to go back a little bit. Yeah, slightly. So it's starting to turn. And so that is obviously something you're going to see once there's been a little bit of damage done. But like I said, to me, the question is, do they put a little bear trap in like they did on the Qs and then reverse things, because that's what they do, right? People that wait too long to get in, that have been waiting for a long time to really step it up and feel like they now have their moment, they're going to seize upon it. They do a tremendous job at frustrating those folks. And that's just what they do. And so this has been the case for as long as I can remember. When I got started, it was the case in the early 90s. But so this is a great example of that. Now, what you have to see, right, is do we bump into in the Qs from the underside? Do we bump into the support line, which you may as well just call the 50, because you probably don't have the exact same support line on your charts. But basically, right, can you get back above the 50? Can you hold back above the 50 is probably the big question. So I'm kind of thinking the scenario to me that makes the most sense, although I don't have great confidence in it, is that maybe there's a little bit of ugliness Monday early. Maybe they start taking things back up after that, try to put it together on Tuesday. And then, right, midweek, maybe they just do a sustain. And then by the end of the week, maybe we start to see things creep back in. But I think the smart play to me is just to keep trading for singles and doubles, because we've said back and forth action for weeks now. And the smart play to me is to keep your eye on this. And if this is hesitating, right, we have a nice little maybe pullback or something on Monday and Tuesday, I think that would give them a reprieve, right? They'd be able to maybe get a nice little rally going. But if you start to see this power through that high at 42.06, the recent high, that might be something they can ignore for a little while, I think, right? But I don't think they can ignore that for too long. And I think if you're riding longs, because they do move stocks back up a little bit, I would start to go into more of an aggressive position management posture if rates on the 10, this TNX starts to take out that high. That to me would be a concerning sign. And that would tell me that if it really starts to power, they might have to finally recognize that. And that recognition could bring about swift reversals in stocks. because it's no small thing, in my mind at least, to be in a consolidation as we have been for not quite a year, but almost a year, where you've been in consolidation. If you can see you can see the upslope there. I don't have you can just look at the 50, the gold 50 rising. You can see that this is improving. I don't really use moving averages a lot. I just like to note them for people that like them, and there's a lot of people that do. They're not my biggest thing at all, but for me, it's worth noting because so many people follow them. But yeah, I mean, you can just see the 20 and 50, like they're starting to perk, and so is the 100 even now. So that these are signs that things are sort of strengthening in there, and they could go. So again, I'm not a big uh, short side player against the trend at all, but I'm certainly not a seller at resistance. I don't like to. Some people are very good at this, by the way, but I'm not. So I'd rather see a rollover before I get involved and fight this, right? And so could this come up here, really not have the heart to go through, and then looking bad, and then start looking bad, and then you could see that there's not a lot of technical, let's say, forthrightness, right? There's not a lot of reality to this push. It's kind of like almost reflexive, or it's more indicative of a fake out. There's no real thrust. There's no real conviction. You might see some poor technical readings on a second high near here, and then it rolls over. But this is, to me, is just not set up for a big high, right? If we do at the moment, and again, anything can happen. Everything can change so quickly. You can only work with what you've got. But if you look at this, right, you just do the inverse, you can see like how this thing's getting ready to potentially start plumbing new lows, right? That to me is not something I'm ready to buy yet, right? If I flip it around, and that's always something that can be helpful, just to kind of look at that inverse by adding that minus sign in front of the symbol. And then you get that, and you feel like, okay, this definitely doesn't look good, but there is maybe like a little positive divergence at the moment that could be happening. I'm just not a big fan of trading. Not that you would trade this, but I'm not a big fan of just going against the trends that are starting to emerge and pick up. I'm really more of a, let's try to find a way to go along with these. And like I said, to me, if this continues to move up, which I think overall the odds are that it tries to do that in the near future, may not be this week, but just tries to do that overall, then that's a problem in my mind. That's a big problem in my mind. So that's what that looks like. The dollar, not surprisingly, looks pretty similar, right? So in terms of it's looking better, in a simple way, clearly, right, as we noted last week, this is still below downtrending 200 SMA in purple, right? So now that it's here, it's past the resistance line. We'd have to look at it and say, well, what's going on here? Does it have some more in the tank here? I don't know. I think it did get a little sort of short-termish overbought, not in a big way, but just a little bit. You might see a little dawdling here, above that support, what could be the support line now, right? That was the resistance line. The 150s there in rust. It's hard to differentiate that from my support line. I'll just make the support line blue. But yeah, you can see that. So it's I'm calling it support now that it's above it, but obviously it was resistance until very recently. But anyway, that to me is starting to make a move. You can see there's a series of higher lows and higher highs. It's just an intermediate trend. It's not the long-term trend. So it hasn't broken out and through. And I'm not really feeling as bullish about it technically as I am TNX. I think TNX looks better technically, just overall. But we have to be cognizant of this because it just started, this little consolidation, served as a couple of weeks here, served as a little bit of corrective time, and with a higher low, not too far from resistance, that should have the energy to push through to the 200. And that could be the real line in the sand, right? But for the long-term trend at that point, if you get through there, hold, could continue to work its way up. Not a good thing. So this is threatening. The TNX is clearly threatening. VIX, as we said, VIX itself could have a little bit of a gap closure, right? That would not be shocking, especially, right? These guys, right there's your gap number, and you didn't close it last week. It would be sort of near the 50 on the VIX right now. I don't chart this the same way I do, a typical security, just for the record, but I do like to take a look at it. You do see certain things that seem like they have validity here and there, but they've done a tremendous job, I think, at suppressing this thing. And it's the summertime, right? We're late in the summer. Really, the unofficial end of summer is only a few weeks away. We know it runs till the autumnal equinox, I think right around the 21st of September, typically. And then you really officially get into autumn. But the Labor Day holiday typically is looked at as the unofficial end of the summer. And that means we have a few more weeks of maybe summertime listlessness, maybe summer, the old dog days of summer, hazy summer days, that kind of thing. And so Ron Ianieri, he used to talk about that a lot. It's true. They're usually right. Wall Street takes their vacations. Typically, a lot of these folks tend to take off in the latter half of this month. And that's interesting in that the reason they're doing that is because everyone sort of knows that the action sort of isn't anything special in a typical year. But what that does do, at least it has in the past, I don't know if it will anymore because, right, computers are in control of so many things, but that does make the markets thin and susceptible to big moves, right? And so that's my recollection on all the Augusts I've been through. It's been mainly listless in the second half, probably the majority of the time. But there's been a few scenarios that unfolded that were sort of like an Asian crisis, banking crisis comes to mind, a few other things that come to mind. And then there was something that had to do with the housing market where there was an initial sort of sell-off and they recovered. So it's had its moments, but typically it's nothing special, right? So another reason why if you play the probabilities, which is tough to do, but if you play the probabilities, you should probably expect not a lot to go on. It could be listless and you would get singles and doubles and be happy. But again, you just don't know. You just never know. And that's what, that's why I showed up like a dummy all those years when I was making markets on the floor and on a desk or whatnot, because you just never know. So you've got to be there. You just don't know what can happen, but usually, yeah, it is the way it is. But so with respect to the VIX, right, it's really not a surprise to me that despite the vulnerability that this thing's where it is, because these guys have suppressed it, I think, and B, this is one of the worst times to be long volatility. In my experience, if you're a long vol, I've seen some massive volatility crushes over the years, but they do crush volatility, in my recollection, quite viciously into the Labor Day holiday. So you may want to, if you're seeing that they're not letting this market drop and some of the stocks you position yourself in, you may want to do some hedging, right, of volatility risk that way, or at least theta risk, because a lot of times you will see a little bit of a swoon and then that starts picking up as September really gets started and you work your way into the early days of the fall. But final note I'll say before wrapping up is I think this is it for me. Keep your eye on this, see how the stocks are trading in relation to it. Know that there's a potential bear trap in some of these things, right? Especially the Qs with the way that it broke down below the 50, and know that unfortunately in modern times, this stuff can unravel very quickly. But typically what they do after having a big breakdown that everybody sort of sees on their charts, they typically tend to frustrate people. So you also can't be surprised about a bear trap being set for a few days, a few sessions at the least, where they try to make things look better. And you're sort of scratching your head saying, are they really going to try to do this on that news or whatever the case may be? But yeah, that's the thing. I think it's sort of 50-50, which is why I'm not really strong on exactly what will unfold this week. I would say if I had to go with it, I'd go into say maybe a little short-term weakness only on Monday morning. My best guess would be a little weakness on Monday morning, set the stage for a little bit of a rally midday, maybe through Tuesday. If they can pull it off, get it back above here in the Qs, and then the real fun will start. But I think you're best served with just keeping your eye on that TNX and seeing how stocks are reacting to it. And if it starts to trade very inversely, right, to each other, then you'll know it's something you should really keep your eye on. And that could be one of the tells. I do think a lot of distribution went on last week. I think overall there was selling. And I don't know if that was liquidation of longs or mainly, or if it was an establishing of new shorts. But I think overall they sold into this market. And so that to me, right, is telling me that sellers are using strength to sell stocks at this point. So I would say that overall more money will start flowing out as things stand than flow in, and that means we should see more corrective activity. So a tough call this week for us, unfortunately, but sometimes that's the way it is. It's complicated by the things I covered. It's also complicated by the second half of August factor. So as usual, do your best, right? Just be nimble out there. Be happy with singles and doubles. When you start to see that TNX move up dramatically, if it does, I would definitely, if I'm riding longs, I'm going to be a very aggressive roller trimmer. And if that finally starts to affect stocks, you'll be happy that you were. If it doesn't affect stocks, I'd be surprised, but you'll still be making money if you are rolling aggressively anyway. So it's win-win that way. And again, sometimes it makes sense to go for the gusto, and sometimes it makes sense to take what you can get. And I just think we're in more of a take what you can get for now market, and let's see how things unfold from here. So I hope that something I share with you helps you out this week or some week in the future. I want to thank everyone for tuning in. And I'm sorry that I didn't have more time, but I am still worried about my tech setup here. And I'm just going to try to get these video done, and then we'll get the sector situation video done. So at least we have something published for the week rather than nothing, because I really had to fight my way into stability pretty much all morning long. So again, thanks for tuning in. Everyone stay nimble this week and take care.